Okay. Then his motivation to finish off the class today itself and to continue sometimes doesn't is not that strong. So let's not make ourselves very you know very relaxed, or just to give a class if you're feeling somewhere tired maybe, or you had a difficult day or something like that. Okay, fine. So is everyone ready? Come on, I want to hear some words from your side also. Okay, great. How many of you are pursuing articleship right now? Raise your hands. How many of you are pursuing articleship? Okay. Only, it's hardly 10%. I have given you guys right to unmute yourself. You can unmute. You can unmute yourself and maybe talk wherever required. And if I feel, if anytime during the session I feel that there's a disturbance, I will take away that right. So be careful about it. Okay, guys, let's see. Now, see, if you can see that there are 8 pages in this PDF, bank audit PDF, there are 8 pages. We won't start with the first chart itself. So these charts are going to make your life very easy, very comfortable. We have designed these charts in such a manner that the difficult things, difficult topics you'll be able to cover easily. Let's see, guys. Let's go to, if you are on PDF, let's go to page number 4. Page number 4, concept number 240. For each and every concept, we have put a concept number so that it's very easy to look at that particular concept. Let's see, guys. Now, in this particular chapter, they are giving you more and more knowledge about how banks function. As I said, more and more knowledge about how banks function, what are the incomes, what are the expenses, what are the typical terminologies which are there in the bank. Because it's very important to understand their working, and then only we'll be comfortable in doing audit of these entities. So in this chapter, it's more about knowledge about the banking terminology, their accounting, their income, expenses, and definitely then there's some part where we talk about the audit procedures also. Now throughout this particular chapter, you have to think from the point of view of bank. So just think about it that you are sitting in the accounts department of the bank and you are doing accounting. You have to think from that point of view. Okay? Not from the auditor's point of view, from the point of view of a person who is sitting in the accounts department of the bank. Okay? Now, the first thing is, the biggest problem in the bank is NPA, non-performing assets. Okay. Now, what do you mean by non-performing assets? So RBI has IRAC norms. Anyone knows without going to Google what is full form of IRAC? Come on, guys. What is full form of IRAC? Anyone? IRAC? IRAC? Anyone? No knows? Great. Income recognition and asset classification norms. Correct. Amal gave the proper answer. Income recognition asset classification norms. So RBI has issued this circular called IRAC, and in that they explain bank when you should treat a particular loan given advance as NPA. We have made a shortcut. So in all these charts, you will find some patterns, some flow, or maybe some kind of mnemonic to remember them. So first thing is, the shortcut is T-cab loan account is NPA. So just like we have Ola cab, we have T-cab, and their account has become NPA. So T stand for term loan. Think from the point of view of bank. If bank has given a term loan, if bank has given a term loan, in term loan they are going to tell borrower, these are the due dates, you are supposed to make repayments, you are supposed to pay your installments. If the amount is not paid, if amount is not paid on that due date, next day it will become overdue. Okay. And if it remains overdue for more than 90 days, remember these words, more than 90 days, overdue, next day it becomes overdue, and if continues to remain overdue for more than 90 days, it will become NPA. So if it is 90 days, if it is 90 days, it is not NPA. If it is more than 90 days, it will become NPA. Then next is term loans are long-term loans. Apart from this particular financing facility, businessmen, they also need short-term finance for paying salaries, for getting a raw material, for working capital related expenses. So they come to bank and they get a limit approved. Suppose that limit is 2 crore rupees, that wherever I want money, I will withdraw from the bank up to rupees 2 crores. I will pay my expenses, run my business, and whenever I get money, I will repay back to you. So that is called CC, cash credit. You can withdraw cash anytime you want. Credit here means loan. You can withdraw cash anytime you want. So cash credit, and that's overdraft. If you make a separate account, that's called cash credit. If you have already existing account, that's called overdraft. Now guys, interesting thing. Come on, who is going to tell me what is difference between, what is one very important difference between term loan and CC when it comes to repayment? Can anyone tell me what is the difference? What is the very big difference when it comes to repayment in term loans and CCOD? Can anyone tell me what's the difference, guys? Correct. Bang on target. Now, in term loan, we have repayment dates. Repayment dates are given. There are EMIs generally. But then in CCOD, there is no fixed repayment date. There are no due dates. So, RBI came up with a new concept, and you should be aware about it. This can be targeted in the MCQ, that in case of CC and OD, it will be treated as NPA when account is out of order. Now, what do you mean by out of order? Account will be considered out of order if outstanding amount on CC or OD is exceeding the limit continuously for 90 days or more. Now, wordings are a little bit different. If outstanding amount is exceeding the limit for continuously 90 days or more, it will be out of order. Now, sir, how can person cross the limit? You are correct. It is very rare thing that they will cross the limit, but it can happen. Suppose he withdrew, withdrawal is 2 crores only. The limit is 2 crores, withdrawal is 2 crores. But when we take into consideration interest amount or penalty amount, it is crossing the limit. It is very much possible that because of interest, because of penalty, or because of some unusual circumstances, amount outstanding may cross the limit. And in that case, it is duty of the borrower that he should immediately repay and bring it back. But if the amount outstanding continues to remain more than the drawing power for continuously 90 days or more, it will become out of order and it will become NPA. Now next is, if outstanding amount is within the limit, if outstanding amount is within the limit, guys, okay, in that case also it can become NPA. But if there are no credits, when borrower deposits money in books of banks credit them. Cash account debit to borrower account credit. If there are no credits, that means borrower is not depositing anything. Okay, for continuously 90 days or more. Now this is bad. You are not paying a single penny for 90 days or more. Again, it will be treated as NPA. Now, if there are credits, but those credits are not sufficient even to cover the interest. You are hardly creating how much? You are creating 2 lakh rupees and your interest for 90 days is 6 lakh rupees. Now the amount which you have credited is not sufficient even to cover the interest debit. That is, you are not even paying the interest. again your account will be treated as NPA. Come on guys, T for term loan. If amount remains overdue for more than 90 days, it will become NPA. C for cash trade and overdraft. In this case, if account becomes out of order, it will become NPA. Amount is outstanding more than the credit limit for 90 days. Even if it is less than the limit, but if there are no credits or credits are not sufficient even to cover the debits of interest, it will become NPA. Now next is guys, credit card. Now, what is unique about credit card? Unique about credit card, when it comes to credit card, every month a statement is generated. That is called as statement date. Every month statement is generated. That is called statement date. And in that statement date, bank is going to specify something called minimum amount due. Minimum amount due. Correct. Every statement they are going to specify minimum amount due. This is the amount credit card holder is supposed to pay. Now RBI said that, okay, if credit card holder is not paying minimum amount due within 90 days from the next statement date, that is extremely important. Next statement date, this credit card account will be treated as NPA. Now it's very interesting to understand, 90 days is not from the statement date. No. It is not from the due date. Every statement is going to have due date. But this due date may differ from bank to bank. So for consistency, what RBI did? For consistency, RBI said that, okay guys, let's count 90 days from the next statement date. Okay. So that is going to bring a consistency across the industry when it comes to NPA of the credit cards. So remember this point, 90 days in case of credit card will be counted not from statement date, not from due date, but next statement date. It brings a lot of consistency. And then they have further said that gap between two statements should not be more than a month. Should not be more than month. So automatically that means they are giving a month to pay, and then 90 days, then it will be treated as NPA. Due date is not important to determine NPA, but it is important to determine overdue status. After 90 days, now you must be also aware, credit information companies. So we have credit information company where banks and NBFCs, they give data of all the defaulters. So there is a centralized database. So any bank or NBFC, when they want to give loan, before giving loan, they are going to go to the central database and check whether the borrower is a defaulter or not. That is how you get the CIBIL score. So they are saying that if as credit card holder becomes NPA, you can go and inform credit information companies and levy penal charges. Fine. TCABs. So T for CIBIL is not in our course. We don't need to go in detail, but definitely it is a score which tells whether it is good to give loan to a particular person. It is a score, correct? Just like for sugar we have what is the sugar level, or blood pressure we have what is the BP. On the same lines, how good is the person with his finances, how good he is with the repayment, we have CIBIL. So CIBIL is a score whether to give person loan, whether he will repay. Now guys, agriculture advance. In India we have agriculture as a very important activity. Okay guys, don't worry, this may happen that now recently my camera got bugged, I feel. I don't know, it may go blank for some time, but it's going to come back. So don't worry, till that time you can listen, you can have my audio. Agriculture advance. Okay, agriculture advance. Now guys, in agriculture advance, RBI says that they have divided crop into two parts: long duration crop and short duration crop. Now long duration crops are the crops which generally take longer than 1 year. to get ready and for harvesting. Okay. So long duration crop, longer than 1 year. So what RBI says that, listen bank, if you have given loan for agriculture and if it's a long duration crop, okay, after due date, if farmer has not paid money after due date, wait for one crop season. Wait for one full crop season. And after that, if the person is not paying, then you make this account as NPA. Wait for one crop season. Okay, now that's interesting. And if it's a short duration crop, so bank has given loan for short duration crop, they will specify the due date, and if they are not getting money on due date, okay, then the bank will have to wait for after due date, they will have to wait for 2 crop season. So after due date is gone, you don't get money, wait for 1 crop season. Again you don't get the money, wait for 1 more crop season. Then it will be called as NPA. Okay. So in long duration, after due date, wait for 1 crop season. In short duration, you wait for 2 crop season. Now, there is a state level banking committee. Every state has a state level banking committee. They understand what are different types of crops, when the season starts, when the season ends. Okay, what is the harvesting time, what should be due date, they specify everything. So banks have to give financing as per state level banking committee. They have to keep due dates as per state level banking committee. Okay. Now, next is bill purchased. Bill purchased, bill discounted is again a very short duration loan. Now, if bank has purchased a bill, okay, just a minute, guys. Okay. If bank has purchased the bill, that means they are giving short-term loan of 3 months, 4 months. On due date, they are supposed to get their money back. If they don't get their money back on due date, okay, next day it will become overdue. And if it remains overdue for more than 90 days, it will become NPA. Let's freeze, guys. Come on, what was the shortcut? You can start your mic and you can be with me. You can talk to me. Come on, what was the shortcut? Are you able to unmute yourself? Are you able to unmute yourself? Let me know. Anyone try? Yeah, you are able to unmute yourself now. Okay. Okay, so what was the shortcut, guys? Come on. And if there is no disturbance in your surrounding, you can be on the mic. TCAB, come on. Yeah, TCAB. T for term loan, C for cash credit. Okay. A for agriculture advance and B for bill purchased. So these are different types of advances and their corresponding NPA norms. And as per this, accounts will be classified as NPA, and moment any account is classified as NPA, we'll have to make provisions for the same. Now next, so you can get a straightforward question, you can get a case study, or maybe you can get a case study, or there can be MCQ also. Now apart from that, let's see, guys, let's go ahead. In practical life, lot of challenges, lot of confusions may challenges and lot of confusions may happen. So RBI has given clarifications. Now so we have a small story. For this, that ICICI Bank is giving multiple loans and making investments, multiple loans and making investments in debentures of Mr. Ambani. Okay, Mr. Ambani. So there are multiple loans. Suppose the loan amount is 100 crore, 100 crore, 1000 crore, 10,000 crore. So three loans are given. And apart from that, they have also invested into debentures of Reliance Industries. So let's assume that is 200 crores and 2000 crores. So bank has invested, ICICI Bank has given three loans and they have invested in two different types of debentures of Mr. Ambani's company. Now, they are repaying all the loans, they are making all the interest payments, everything all fine, except one loan of 100 crore. Except one loan of 100 crore. Okay. Everything else they are paying. So, what will happen? Whether that one loan will become NPA, that loan accounts for only 5% of the total money given. That loan accounts for only 5% of the total money given. Now you guys tell me, what will happen? Whether that loan will be NPA, all the loans will be NPA. What about debentures? Even they will be NPA? Okay, correct. It's very simple. Even if a single loan becomes NPA, or single investment become NPI, all the loans and all the investments will be called NPA, NPI. Okay. Now, so security cannot, so in this case, okay, it is borrower wise. For a particular bank, think from a point of view of a particular bank. For a particular bank, if borrower defaults in one loan, if one loan has become NPA, all the loans and investment become NPA, NPI. Now one more question, guys, tell me. Suppose there are two banks next to each other. There is a ICICI Bank and next there is a SBI. And borrower has defaulted in case of ICICI Bank. So they are going to treat all the loans and debentures NPA and NPI. What about State Bank of India? Come on, tell me, guys. ICICI Bank has just made all the loans NPA, NPI. What about State Bank of India? Will they also declare loan NPA, NPI? Yes, no. Will they also declare NPA, NPI? Correct. Bang on target, guys. Correct. Now listen, it's common sense. SBI is not going to know what is happening in ICICI Bank. No one makes a public announcement for NPA, NPI. Okay? No public announcements. Public announcement is made for willful defaulters. So every bank is going to see their own status of the recovery. Every bank is going to see how well they are recovering the money, and accordingly they are going to make accounts NPAs. Now, suppose, let's take story ahead. Now, ICICI Bank given loan of 10,000 crore and Mr. Ambani gives his home of 10,000 crore as security. Now, there is a loan of 10,000 crore, there is a security of 10,000 crore. Can this loan ever become NPA? Because there is an equal amount and maybe higher amount security. Can this loan become NPA, guys? What do you think? So Anurag is saying, yes sir, it is very much possible it will become NPA. Do you all agree with this? There is an equal amount of security which we can sell and recover money anytime. Can such kind of loan become NPA? Answer is definitely yes. Yes guys, it can definitely become NPA. Security cannot save you from NPA, NPI. Security cannot save you from NPA, NPI. But then if the loan is secured, NPA provision rate which will be applicable will be on lower side. It will be on the lower side. So that's how it's going to help. It's not going to save you from NPA, NPI, but it will definitely save you. It will definitely save you in the form of lower rates of provisioning. Okay. Now, this is very interesting. Suppose, now we all know that Ambani's transition of power is happening. So, Mr. Mukesh Ambani is giving the businesses to children. Okay, Isha Ambani and then Anant Ambani, Akash Ambani, they are giving the businesses to them. Suppose let's that in market they're doubtful how good these kids will manage the business. They feel, suppose there's a potential threat of recovery. Suppose they take some wrong decisions and they feel that bankers feel their money, they're going to lose their money. There's potential threat of recovery. Or they feel that someone has done fraud with the money. Okay. So already there is a negative sentiment. Already there is negative sentiment with respect to recovery. And what happens? Sea levels start increasing. Okay. Now Antilla is on the seashore. Definitely seashore. Suppose hypothetically, because of global warming, sea level is increasing and now the water is coming to Antilla and its valuation starts crashing. Suppose the valuation crashes down to 4,500 crore. The time when loan was given, it was 10,000 crore. Now it has crashed to 4,500 crore. What will happen? If two negative news are going to work together, if two negative things are going to work together, it's going to be a disaster. Guys, it's going to be disaster. Now, what kind of disaster will happen? Listen guys, can anyone tell me what are the different categories in NPA? We know that now any loan is initially a standard loan, a standard asset. After 90 days, it will become NPA. What is the first category of NPA? Who is going to tell me? What is the first category of NPA? Yeah, correct. Bang on target. The first category loan enters is substandard. The first category loan enters is substandard. Correct. If amount is not recovered within a year, it is going to go to the next category. It is going to go to the next category. Okay. That is doubtful. In doubtful, you have three subcategories. Doubtful for 1 year, doubtful for 1 to 3 years, and doubtful for more than 3 years. Okay. And for all these categories are made because they are different provision rate. For substandard, we have 15%. Okay. For doubtful for 1 year, we have 25%. For doubtful for 1 to 3 year, we have 40%. For more than 3 years, we have 100%. Okay. So 15, 25, 40, 100. 15, 25, 40, 100 is the provisioning rate. So what RBI says, that if there is a potential threat of recovery, or there are news or there are evidence of fraud, that money was fraudulently siphoned off, and at the same time, if value of the security reduces, reduction in value of security, if both the things happen together, then, and that too more than 50%, that in that case, it will be straight away classified as doubtful. So they are going to bypass one category, that is substandard, and they are going to take loan directly to doubtful. And if the value has reduced so much, it has reduced to 800 crore. Loan is 10,000 crore. Loan is 10,000 crore. Okay. It is 10,000 crore and the value of security has reduced to 800 crore. That means security cannot recover even 10%. Cannot recover even 10% of the outstanding amount. Even 10% of the outstanding amount. In that case, loan will directly go to loss asset. Loss asset. Okay. So guys, so first was ICICI. You have to focus on the images. ICICI Bank gave multiple loans. One loan, one investment, NPA, NPI. All loans, all investment, NPA, NPI. Then next image is Antilla. Security cannot save you, but in some circumstances, security can ditch you. It can directly push you to substandard category. it can directly push you to a loss asset category. Now, next is, now let's take the story ahead. So we have first, see the whole thing, how to remember this is, in first we had mnemonic. In first concept we had mnemonic. In the second we are having images. Moment you recall ICICI Bank, you will remember the concept of borrower wise. Moment you see Mukesh Bhai and Antila, you will remember the concept of security. Now Mukesh Bhai has taken loan for Reliance Refinery, one of the biggest refineries of the world. And there's a consortium loan. When two or more banks together they give loan, it becomes a consortium loan. That's a consortium loan. Suppose there's a SBI, there's Punjab National Bank, and there is a Canara Bank. So SBI, then the next one Punjab National Bank, Canara Bank. So three banks have come together and they have given loan. The bank which gives highest amount of money, that bank is called as lead bank, and other banks are called as participating banks. Now it is responsibility. It is responsibility of the lead bank to do all the administrative work, to make all the agreements, documents, to collect money and give loan amount to the borrower, collect installment and distribute it amongst the participating bank. It is responsibility of the lead bank. Now guys, SBI is the lead bank. SBI is getting its money on time properly. Punjab National Bank is also getting money on time properly. But Canara Bank is somehow not getting its money. What will happen? Canara Bank is not getting its money on time properly. What will happen? Tell me guys. SBI and Punjab National Bank, they are getting money, but not the Canara Bank. Whether all the banks will treat as NPA? Whether everyone will treat as NPA? Or only Canara Bank is going to treat it as NPA? Yes, you can start your mics also, okay, and give answer on the chat also. So some people are saying all, some people are saying only Canara Bank. So guys, in this case, okay, in this case, again the concept remains same. Every bank has to see status. Every bank has to see status in their books. Every bank has to see recovery status in their books. SBI is getting money on time, performing asset. Punjab National is getting performing asset. And if Canara Bank is not getting non-performing asset, only Canara Bank is going to treat it as non-performing asset. So if there is a consortium finance, there is a lead bank, there is a participating bank, there are different roles and responsibilities. If it is not serviced, what do you mean by not serviced? Not serviced means if you are not getting money, if the banks are not getting money on time, they are not getting installments, that's called not serviced. Then this case, okay, every bank is going to see their own recovery status. So again the concept is same. See your own recovery status. Every bank has its own recovery status accordingly. One more very interesting thing they are saying that. They are saying that sometimes it may happen that participating bank has they got the money. Participating bank, lead bank got the money. Okay. And some procedural part is pending and they are yet to give money to the participating bank. In this case, they have said that if lead bank confirms and gives the letter that yes, we have received your money, it's in process, you are going to get your money, don't worry. And within few days, they give money also. So on the basis of that communication that we have received your money and we are going to pay you, and if the money is recovered, then that loan may not be treated. That loan may not be treated as NPA. If the money is stuck only for some procedure, if money is stuck for temporary period, for very short duration temporary period because of some procedural issues, okay, and there is a proof for that, that will be sufficient. That account will not be treated as NPA. Okay. Now next. Okay. So guys, we have seen NPA norms. Now we have seen the exceptions and clarifications. The first image was ICICI Bank, next image was Antilla, next image was Reliance Refinery. Now next is this inventory. Next image is this inventory. Okay guys, now can any loan become NPA even if they are paying money on time? Tell me, can any loan become NPA even when they are paying money on time? They are paying all the installments on time? Can that happen? Yes. Correct. Guys, be energetic, keep communicating, and as I said, if you're comfortable, you can start your mic and you can talk to me. The answer is yes. Yes, it can happen. Even if borrower is paying all the money on time, even then his account may be, even then his account will be, may be called as NPA, and the provision may be required. So there are three cases here. Three cases. Let's see. Now the first is regarding working capital loan. Okay. So you must be aware, it's a very common feature. Banks give working capital loan. And when banks give, think from the point of view bank, when banks give working capital loan, okay, working capital loan is generally given on the basis of security of current assets, stock and debtor. And in this case, generally, agreement says that borrower is supposed to send stock statement containing details of stock, debtors, creditors. They are supposed to give quarterly statements. On the basis of these statements, bank uses a formula. We are going to see that formula. Bank uses a formula and computes maximum drawing power. They compute maximum drawing power on the, okay. Now, what RBI says that it is very important to obtain stock statement, debtor statement from the borrowers on regular basis. If bank is not getting these statements on regular basis, okay, and if the existing statement is older than 3 months, if existing statement with the bank is older than 3 months, it was only 3 months back they got the statement. If it is older than 3 months, then that account will be declared as irregular. It will be deemed as bad, it will be deemed as irregular. And if it continues like that for 90 days, it will become NPA. So if borrower is not submitting stock statements regularly, and if the bank is having a statement which is older than 3 months, that's bad. And if this situation continues for 90 days, it will become NPA for not submitting stock statements. Yes, that is so important. It is so important for the borrowers to submit stock statement. If that is not done, then because of that also, account may be declared as NPA. Now, you must be aware about the CC limits. Now, the CC limits, OD limits, they are generally for 1 year. So, it is responsibility of the borrower. That these are for one limit. You come to bank, and after a year, when the tenure is over, you come to bank, give statements again, deposit your statements again, and then you renew your limits. Okay. If these guys are not doing that, if these guys are not renewing their limits within 180 days, that's a bad thing. It will be again NPA. If they are not renewing their limits on due date and this continues for 180 days, then it will be NPA. Second case. So first is document not submitted, NPA. Renewal not done, again it will be NPA. Then next is ad hoc credit. Ad hoc means temporary credit, temporary loan, emergency loan. Okay, that's ad hoc. So borrower came to the manager see, you know, my 100 crore loan is approved, but it is going to take time. Okay, so for some period, just give me 5 crores. So bank manager said, okay, I know that your loan is approved, so take this 5 crores. Now it was responsibility of the borrower to repay that 5 crores. Now, if ad hoc credit means ad hoc loan, temporary loan is not paid, that matter is not paid, that amount is not repaid, it is not resolved, it is not renewed, not converted into another, it is not converted into proper credit facility within 180 days, it will become NPA. If ad hoc credits are not properly dealt with within 180 days, it will become NPA. So 3 situation, guys. Number 1, if a stock statement is older than 3 months, it becomes irregular. If it continues like that, it will become NPA. If renewal is not done with the regular limits, it will become NPA. And if ad hoc credit continues, it will again become ad hoc credit is not converted into it is not repaid or not converted to proper loan, it will become NPA. Now next is agriculture loan. So next, Mukesh Bhai has taken loan for agriculture. So these are the 3 images you should remember, guys. These images are going to make your memory strong. You are going to remember it for a long time. Okay, agriculture. If there's a natural calamity, generally banks decide to give some kind of relief to the borrowers. They may convert short-term loan to long-term loan. They may go for reschedulement. They may give fresh loans, and a lot of these things are done. What RBI says that banks are doing such a good thing, let's give relief to them. They say that in case of agriculture loan, if there is conversion of short-term to long-term reschedulement, then the NPA counting will not happen from the original due dates. It will happen as per the new due dates. Okay, so bank are going to get relief in this. NPA determination will be as per rescheduled terms. That means new dates. As per new dates. So that's a relief for the banks. They won't be hit by the NPA provisions. The moment any account becomes NPA, there's NPA provision, and everyone is afraid because of the NPA provision, profits may go down. So guys, again, quickly, let's see. The first image was ICICI Bank, second image was Antilla, third image was Reliance Refinery, fourth image was inventory, fifth image was, okay, farming. Now, we have given this heading saviors. Guys, even if you don't, one more thing, even if you don't need to open, don't need to open maybe these charts on some other device also. You can simply look at the screen and keep answering. Okay. Now, regularization. What do you mean by regularization? If the overdue amount is repaid, if borrower repays all the overdue amount, that's really great. Okay, he's paying all his amount. Now he's done with all the wrong things. That's called regularization. Regularization means rectifying your wrong things. Regularization means paying all the outstanding amount, rectifying your wrong things. Suppose regularization happens. If outstanding amount is repaid, tell me guys, that account will be NPA or it will be PA, performing asset. If in any account repayment is done, outstanding amount is cleared, it will be NPA or PA. Okay, great. That will become performing assets. Correct. It will be a performing asset. It will not be a NPA. Perfect. Great, guys. Great. Good going. Now, but if auditor sees that this regularization is little suspicious. It is little doubtful. There are only few credits, only few entries of repayment, and then you see that money is subsequently withdrawn. there are only few credits and money is again withdrawn. Or you came to know that this money was from a new fresh loan from the same bank. So to repay the old loan, a new loan is given. That means there is no real inflow of money. If there were few credits and that money is taken back or money is coming from fresh loan of the same bank, there is no real flow of money. That is called, here it is called inherent weakness. There is a financial weakness in the account. Financial weakness in the account. This account will be deemed as NPA, even if it was regularized. NPA. So, what is the concept? If there is a regularization, account will be out of NPA. But if auditor observes there is an inherent weakness in the form of few credits, then subsequent withdrawal or he realizes that money is paid from the fresh loan from the same bank, there is an inherent weakness. Even when it is regularized, it will be deemed as NPA. Okay. Now, so in Savior, first is regularization. If bank has given a loan and if there is a central government guarantee, if bank has given a loan and if there is a central government guarantee, then that account will never be called as NPA. It will get the protection. Central government, very powerful, lot of money, it will never become NPA. But only till the time that government is not repudiating, saying no, when the guarantee is invoked, asked for money. Okay, what they are saying, if there is a central government guarantee, it will not become NPA. But if guarantee is invoked, that means money is asked and government repudiates it, government says no, this protection will go away. If government is not honoring their commitment, this protection of NPA will go away. What about state government? If there is a state government guarantee, RBI says there will not be any protection from NPA. Protection will be only when guarantee is given by central government. That's very important. In exam, this is targeted a lot of times. Central government guarantee, you will get the protection. State government guarantee, you are not going to get the protection. Now this is very important. So in Savior, we first had regularization can become a savior, but if there is an inherent weakness, it is not going to help you. Guarantee, only government guarantee central government guarantee can become a savior. Super 5 security. Now RBI is very fond of these financial instruments, and that is FD. Not FG, FD. Bank can give loan on the basis of their own FD. Now that's interesting, guys. Bank can never give loan on the basis of FD of other bank. Not on the basis of FD of other bank, on the FD of their own. So if bank is giving loan on the basis of FD, term deposit, or NSC, National Savings Certificate, KVP, Kisan Vikas Patra, IVP, Indira Vikas Patra, LIP, Life Insurance Policy, if these are the 5 securities, that particular loan will never become NPA. Okay. Last thing, guys, and then we are through with this. Last thing, loan to staff. Let's understand. Very simple, straightforward. Now, bank can give loan to the staff. Okay. And it can give loan in 2 capacities. They can give loan as an employer. See, bank is also employing people. So it may give loan as an employer or it may give loan as a banker. If bank is giving loan to its employees as an employer as per their schemes, whatever schemes they have, loan schemes, if they are doing that, okay. Tell me, guys, first of all, loan given, this is very simple. Let's start with simple. Loan given is an asset or a liability for a bank. Loan given is an asset or a liability. Come on, sir. This is We know this much. Okay. Asset or liability? Asset. Great. It is asset. Great. Now, so it will be shown on the asset side of the balance sheet. Asset side of the balance sheet. Okay. If loan is given as employer, where we are going to, if loan is given as employer in balance sheet, where it will be shown? Where it will be shown? Current assets, of course, asset. Balance sheet on asset side it will be shown, but I am asking the heading. In which heading it will be shown? Advances, loans and advances, loans and advances. Okay. Other assets. Okay, great. If bank is giving loan to its employees as an employer, this is not a regular loan. This is not a regular loan. This is not a banking activity. This is not a business activity for them. It will be shown in other assets. It will be shown in other assets. That's very important from MCQ point of view. Very important. But if bank is giving loan as a banker, if bank is giving loan as a banker, that just like I give loan to others outsiders, I am giving loan to you. This loan is not covered in any employee scheme. If this loan is not covered in any employee scheme, it will be shown under advances. So now we have to see carefully what are the terms and conditions. If it is as an employer, it will be shown in other assets. It will be shown in other assets in others. So in others, there will be other assets. Okay. In other assets, it will be others. And if the loan is given as banker, it will be shown in advances. Moment if employee leaves the bank, he is no longer employee, then that loan will be shifted from others to advances. Okay. Now, okay. Suppose a loan of 40 lakh is given. A loan of 40 lakh is given to employee. Okay. A loan of 40 lakh is given to employee. And this happens in case of banks and banks employees. Terms of the loan says that you are supposed to repay 10 lakhs every year. 10 lakhs every year. And it will be treated as a principal recovery. And interest payment will start after 4 years in 5th, 6th and 7th year. Okay. So terms are in favor of the employee a lot. So first 4 years, whatever payment they are making, it is treated as recovery of the loan, repayment of the loan. And then next 3 years they are paying interest. So query was sent to RBI that in case of staff advances, terms are little weird. For first few years, there is no interest payments. Okay. Tell me guys, for first 4 years, there is no interest payment. Will this account become NPA? Will this account become NPA? You understood the example? You got the example, guys? I'm not able to see any answers. Earlier, you guys were very quick. So a loan is given to the employee. Loan is given to employee, and for first 4 years, there is no interest payment. Interest payment is made in 5th, 6th and 7th year. Okay. Okay. RBI says till the time payments are done as per term, whatever are the terms and condition between the bank and staff, if payments are done as per the due dates, If payments are done as per the agreement, as per the due dates, whatever agreement says, whatever due date says, it will not be NPA. Till the time due dates are complied with, till the time due dates are complied with, no problem at all. No problem at all. No issue at all. Okay. It will not be a NPA. It will not be NPA. So guys, we are through with NPA norms. We are through with NPA norms, and we are also through with exceptions and clarification. Are there any questions from your side? Any questions, guys? You can raise your hand and you can ask questions. Or you can simply put it on the chat. Okay, all clear. Great. Now, sir, lead bank and participant can you summarize once? Bank which has given more money is a lead bank, and the other banks are participating bank. So lead bank is going to do all the administrative work, collecting money, and then giving it to the borrower, recovering money, and distributing it to the participating banks. That's the duty of the lead bank. Is computation of drawing power important? Definitely it's important. Definitely 100% it is important. It was asked in recent exams. Okay, it is given in our module. So guys, come on, let's see. Okay, drawing power. Now let's first understand there are two limits actually. Sanction limit. So when borrower comes, okay, to the bank is going to see history of the borrower, how good was the business, how good he was repaying the money. They are going to see history, how good was the business and repayments. They are going to see how good are the assets, liabilities, how good is the future, and depending on the overall financial health, they are going to decide maximum exposure to this particular borrower. That means maximum loan which can be given to this particular borrower. They are further going to decide what is going to be, they are going to further break it into different types of financing. What is the maximum term loan which can be given? What is the maximum working capital limit that will be given? What is the maximum guarantee that will be given? Letter of credit that will be given, and so on. So depending on overall financial health, of the borrower, okay, they are going to decide a maximum financing limit. This maximum financing limit is called as sanctioned limit. Okay. Then next is, now guys, working capital loan is for working capital, and working capital is nothing but current assets. That is, the loan is given because money is stuck in raw material, money is stuck in WIP, finished goods, debtors, maintaining cash balances, and so on. Money is stuck in the current assets basically. Okay. Now, when a working capital loan is given for basically financing current assets are given as security. So generally in working capital loan, current assets, stock and debtors are our security. Now, looking at what is the present status of the working capital, present status of the security, depending on that, limit is computed, and that is called drawing power. So drawing power is calculated on the basis of current value of stock and debtors, current value and status of stock, creditors and debtors. Okay. It is computed on the basis of primary security which is available. That is called drawing power. So sanction limit is computed initially. That is generally computed once in few years or once in a year maybe. And then drawing power is computed every quarter. Every 3 months they are going to compute it depending on the status of the securities. That is stock levels, debtor levels and creditors levels. Now, borrower cannot exceed any of these two limits. He cannot exceed either sanction limit, neither he can exceed drawing limit. None of those can be exceeded. Computation. Earlier, drawing power was calculated as per the guidelines formed by Board of Studies. Sorry, Board of Directors, not Board of Studies. Board of Directors and approved by auditor. Earlier, I am saying. Earlier, it was calculated. There used to be guidelines for the whole bank, and as calculation were done as per the guidelines. These guidelines were formulated by Board of Directors, approved by the auditor, and across the bank, whenever they are going to give working capital loan, limit will be calculated as per those guidelines. But nowadays it is calculated as per approach and formula given in sanctioned letter. So basically there is a mistake in our ICAI module. There is a mistake in our ICAI module. Okay, they have written that it should be as per the guidelines, which is formulated by Board of Directors and approved by the auditor. But that's an old thing, that is redundant. Now that is already that is old, that is not relevant now. Nowadays calculations are done as per the approach and formula which is given in the sanction letter. So sir, what should we do in paper? We should explain the whole thing, that in module it is specified this, but as per present it is as per the sanction letter. So you should express your whole knowledge, whatever you know properly. Now this is important. In the recent exam this was asked as a question. It can be still asked in MCQs or anywhere it can be asked. How we compute drawing power. So what is drawing power basically? So drawing power is what is the maximum amount of finance you are going to give, looking at this value of the security. So drawing power is the maximum amount of loan you are going to give looking at the value of the security. Okay. Now, it's a common sense. Whenever you are going to see value of the security, okay. Suppose you tell me, guys. Suppose there is a property of 1,000 crore. And there is a bank A which has already given a loan of 600 crore. Okay. And you are bank B. Okay. What is the value of the security what is the value of the security you are going to consider? 1,000 crore or 1,000 minus 600, only 400 crore? Correct. It's going to be only 400 crore. So whenever you look at the security, you are first going to see who have right over this security. Let's first adjust that amount. Let's first make those deductions. Okay. On the same lines here, we have stock of 1,000 crore. Okay. If company has not yet paid for the stock, if there are outstanding creditors, they have first right over the stock. So we are going to deduct that much. Then next, if you have given your creditor bills payable or letter of credit, you have not yet paid them. Okay, you have just given them bills payable. acceptance is a letter of credit, again that will be deducted. They will be having the first right. So creditors and creditors with bills payable or letter of credit, they are going to have first right, deduct them. We are going to deduct 600. Now the relevant amount is 400 crore. Now give me another question. Now we know that only 400 is relevant for us. We know that securities of 1000, but we have to first deduct right of the other people's, right who have preference over us. First we have to deduct right of the people who have preference over us. Let's deduct them. It is 400 crore. Will you finance on the basis of security of 400 crore? Will you finance 400 crore? Will you do it? Okay, common sense says that answer is no. You're never going to do it, because value of the security may go down, and you may need some extra security because you may want to recover the interest. You may want to recover the interest amount, isn't it? So we make the margin. We always deduct the margin to cover the uncertainties. To cover the uncertainties, we always deduct the margin. This will be specified in the sanction letter. These deductions will be specified in the sanction letter. So margin is, and as the risk of the if the asset is risky, we are going to do more deductions. 25% margin will be deducted. So that will be 300. So on stock of 1000 crore, financing will be only 300 crore. So first we make deduction for the people who have preference over us, and then we make deduction for uncertainties, unexpected fall in the price, or you may need more assets. So we deduct margin 300 crore. In case of debtors, again 1000 crore debtors, we are going to deduct ineligible debtors. So old debtors may be ineligible. Old debtors may be ineligible. Foreign debtors may be ineligible. They will specify that. Again, it is given sanction letter. So those poor quality debtors will be deducted. Then we have 800 crore. 40% is the margin. So 480 crore. 480 crore is the financing. In case of debtors, on 1000 crore, financing is for 480 crores. And in case of stock, it is 300 crore. Total financing will be 780 crore. It's very simple, guys. It's very simple, straightforward. And there are good chances that it is already targeted. It was asked in last exams. So you will first explain what do you mean by sanction limit. Then you will explain what do you mean by drawing limit. Then explain what is the duty of the bank. It's very simple. Bank's duty is to initially compute sanction limit properly, looking at overall financial health. Then on quarterly basis, collect the stock statement, stock data statements, create a statement. Then apply the approach in the sanction letter, apply the approach and formula. Okay. Obtain these statements, apply the formula, and get the drawing power. Get the drawing power on a regular basis, and ensure that outstanding amount is not crossing sanction limit, neither it is crossing the drawing power. None of the limits should be crossed. If the limit is crossed, okay, then there is a problem. Account may become out of order and NPA. If these statements are not received on regular basis, we know that after 3 months it will become irregular, and after 90 days it will become NPA. So we have a question whether margin is fixed rate. See this, banks have their internal policies. Banks have their internal policies of assessment, and at the time of sanctioning the limit, they will specify what kind of margin rates will be used. They will specify for land and building there will be some margin rate. For stock there will be margin rate. For debtor, so this rate this rate can change from borrower to borrower. This rate can change from borrower to borrower. This rate can change from depending on nature of the security. This will change depending on nature of security. It can change from borrower to borrower. But once sanction letter is released, it remains fixed for that borrower for that particular security. Okay. So first we'll explain sanction letter. First we'll explain sanction letter, sanction limit, then explain drawing limit, then you explain bank's duty. It's very simple to collect these statements, compute the drawing power, ensure they are complied with, and to keep checking whether it has become NPA because of outstanding amount or not submitting the stock statement. What is the auditor's responsibility? First of all, check whether calculations are proper. Where drawing power calculation, first he is going to check methodology. He is going to obtain a sanction letter and understand the methodology. What kind of deductions are required? How much margin should be deducted? He is going to understand it from the sanction letter. Then he is going to see the data, the quarterly statements or returns. Sometimes there will be monthly statements, quarterly returns, annual reports, annual returns. Whether proper data was taken for calculating. For calculation you are going to need an approach. For calculation you are going to need a method or approach. You are going to need a method. You are going to need a method. You are going to need a method or approach, and then you are going to need then you are going to need data, whether both these things were appropriate. And data, monthly data and quarterly data. So you have June month data and June quarter data, they should ideally match. Then 31st March monthly data, 31st March quarterly data, annual data, they should match. They should agree with each other. If there is a difference, we'll ask the reasons. Next, so this different point, there are 6 points you're supposed to explain. Then next is, there's a very big possibility that borrower may fool the banks. Borrower may fool banks even when they were not having stock, even when they were not having stock, even when they were not having debtors, even when they were having high creditors. They may give false information to have a higher drawing limit. Okay, so this is a threat that borrower may give false data. Okay, now guys, it's question to you. What will happen? What will happen if borrower gives false data? False data, what will happen? Anyone can switch on the mic or maybe write. What will happen if borrower is giving false data? No security for bank. Okay. Okay, what else? What? Not able to understand. What did you just say? Can anyone tell me what will happen? Okay. Let me tell what will happen. Should I give you a hint? Okay, I'll give you one hint. Calculations will go wrong. Okay, hint is schedule 3. Okay, one more hint. What will statutory auditor of the borrower do? Statutory auditor of the borrower, I am saying. One more hint. Caro. Fraud reporting. Clause 2. Yes. Clause 2. Inventory. Inventory. It will be reported. It will be reported in clause 2, and it will also get reported. It may also get reported in clause 11, fraud. If that is intentional, it will be reported in fraud. Okay, listen, guys. If borrower is having stock of 100 crores as per its books, and it is saying that it is having stock of 500 crores, okay, this is a mismatch. So there is a Schedule 3 amendment. There is a Schedule 3 amendment which says that whenever stock statements submitted to the bank and books of accounts, if they don't agree with each other, it should be given in notes to accounts of the borrower. It should be given in notes to accounts of the borrower. And auditor of the borrower is going to put it in Caro. Okay. Now that is a different thing, but then you should sometimes correlate. So there is always this possibility. That's why there is a new concept, that is stock audit. It is mandatory for all accounts having funded exposure, where funded means actual money given. Actual money given is more than 5 crores. Actual money given is more than 5 crores. So if actual money given is more than 5 crores, then in that case, more than 5 crores, then a new CA firm, we are not talking about statutory auditors. We are not talking about statutory auditors of bank. We are not talking about statutory auditors of the borrower. A different CA firm, new CA firm will be appointed, that you go and do stock audit of this particular borrower, of this particular person. If it's a consortium financing, that means 2 or more banks together have given a huge working capital loan, then stock audit will be handled by the lead bank. They will appoint the stock auditors. They will get the stock audit report. Stock audit report will clearly specify whether these guys had so much stock and so much data throughout the year, whether the valuation is proper. Okay, that report will be useful in understanding whether borrower is fooling the bank or not. What will be done in the reporting? So always ensure that it is within proper limit. Number 1, auditor will report whether any unapproved, see, banks will specify these are the approved securities which we can accept as a security. These are the approved assets which can be taken as a security. There will be a policy which assets can be taken as security, and then in sanction letter also they will specify which assets will be considered as security. If any unapproved asset is taken as a security, okay, security, that should be reported. Then next, whenever limit is crossed, that need to be reported. And if the account has become irregular, that needs to be reported. You just need to report it to the management and head office. All these things. That first of all, unapproved securities were taken, then the calculation, then the limit was crossed, and then the account has become irregular. Let's freeze, guys. First we are going to explain about the sanction limit, then the drawing power, then you are supposed to explain responsibility of the bank, responsibility of the auditor, then the next is stock audit, and the 6th is when are you going to do reporting thing. So guys, we are through with NPA norms, exceptions and clarifications of the NPA, and then the drawing power also. Is this point clear? Anyone has any doubt? Please let me know. Anyone has any doubt, guys? Please let me know. It's all clear. Okay, great. Okay, guys. Now let's go ahead. Stages of bank audit. Guys, stages of bank audit is not yet targeted in exams. They have not yet targeted it. So I will not say it's very important. I will say whatever is given in our notes. We have given a single chart with respect to stages of bank audit. So studying that much and expressing on that basis, that will be sufficient, guys. If you express on that basis, that will be sufficient. No need to do anything else. Now, this is very important. We all know that whenever we go to do audit of any particular area, whenever we go to do audit of any particular area, we first go for test of controls. And then we go for first we go for test of controls, and then we go for test of substantive procedures. That includes analytical procedures and test of details, isn't it? First we go and check controls of that area, and then we go for substantive procedures. Now, let's see, guys. So you may get the question that we are audit now. Now here we, in this two concept, next these two concepts we have to see from the point of view. We have to see from the point of view of the auditor. So now we are the auditors. So we are going to bank audit. And we are going to check these advances. The first is test of controls, evaluation of internal controls of advances. What we are going to see? Number one. First we are going to see whether first we are going to see whether bank is having good internal control system for deciding credit worthiness, that is ability to repay of the borrower. Are they having good internal control system to determine, to estimate, to judge what is the credit worthiness of a particular person? So generally they do it depending on the base of income tax returns. They see income and assets proof. More is the income for a particular borrower, more is its credit worthiness, repayment capability. So we go and see the income statements. We go and see the assets. So there should be proper internal control system where they ask for and they evaluate, study, analyze credit worthiness. Generally in banks, there is a software. You have to put income details and asset details, and the software is going to tell you how much loan this person can repay. Okay. There should be proper internal control system, some Excel sheet, some software, some formula to compute credit worthiness. Okay. Next, see, it's in a sequence. So first we have to evaluate credit worthiness. So that should be there. Then we'll ask the person what is he ready to give in security. So there should be proper policies There should be policies in the bank. They should clearly specify which assets are acceptable, which assets are acceptable as security. There should be a policy. Okay. So if it is an immovable property, if there's an immovable property or any asset which need registration, there should be an internal control system which should specify clearly that these assets are allowed as security. And for assets where registration is done, internal control system should ensure that assets should get transferred in the name of the bank. It should get registered in the name of the bank, or at least original title deeds, original documents should be kept with the bank. In case of goods, two things are possible: pledge or hypothecation. In case of pledge, there should be internal control system which ensures that whenever goods are received, they are properly checked, their description, their condition, whether it's proper, they should be properly checked and inspected and then preserved. In case of hypothecation, goods are with the borrower itself. So internal control system should ensure that when the loan was given, there was a proper physical inspection of the stock, and there should be proof for debtors. Then proper record should be maintained for the stock and debtor level on monthly basis. That register should be updated, that what is the level of stock and debtors, and depending on that monthly data or quarterly data, drawing limit should be calculated and limit should be complied with. In case of shares and debenture, there should be internal control system to ensure that either ownership is transferred in the name of the bank for a temporary period till the time loan is not repaid, or the original documents are kept with the bank. See guys, it's in a sequence. First, there should be a proper internal control system to check credit worthiness of the person. There should be proper internal control system with respect to security. Securities with niche registration, then goods where possession is with the bank, or hypothecation and shares and debentures. Then next is, there should be proper internal control system to deduct margin depending on the borrower and the nature of asset. Policy should clearly specify how much margin should be deducted for what particular class of assets and what particular borrower. Clearly, there should be internal control system and policies for deducting margin. Then, after this is done, there should be authorization, authorizing the loan and the loan amount. There should be authorization matrix or limit, that these are the people who can authorize the loan and this is the amount of loan they can authorize. It should be clearly specified. Once authorization is done, proper document, there should be a list of document that should be maintained for the loan. That there should be a loan, there should be loan application, then authorization, then agreements, promissory note and everything. A bunch of documents should be there along with the loan. There should be system to ensure end use of the fund is proper. That money was given for factory, whether factory is made or not, factory is created or not, end use of funds. And lastly, there should be system which oversees operations of the advances. Reviewed at least once in a, whether proper recovery is being done, proper payments are done and so on. So guys, there should be internal control system for 7 things. First, for credit worthiness, then for ensuring that security is safe in the hands of the banks, then ensuring deduction of the margin, then happens authorization, then happens documentation, then happen disbursements and end use of the funds, then happens operations, whether operations are smooth, So guys, if you remember in this sequence, you remember for long period of time. Now next is audit of advances. Come on guys, this is then we move on to the next very interesting part. So this was regarding internal control system first, and then a lot of questions are asked on this. Now once test of control is done, we go for test of detail, substantive, to substantiate Something means to confirm something. Okay. So next is audit of advances. See, the shortcut is be proud of advances. B stand for basis of valuation. Many times loans are in foreign currency. Many times loans are in foreign currency. So in this particular situation, advances should be valued properly. What is the value? What is the foreign currency involved? Proper exchange rate should be done, and it should be valued properly. Then P stand for provisions. If any particular advance is classified as NPA, proper determination should be done whether the category is proper, okay, whether the security status is proper, and then accordingly amount of the provision should be computed. R stand for recoverability. Many times it happens that we give loan and that the person is in financial trouble. He is facing insolvency. In this case, proper in-depth knowledge should be taken, and then depending on real status of the recoverability, provision should be done, amount should it should be properly provided for. Correct, amount should be proper. So if there's recoverability issues, go and in-depth see what is the status in insolvency, what percentage of loan will be recovered. Accordingly, it should be valued. O stand for outstanding. Now the outstanding amount, it should match. Now amount outstanding in balance sheet, it should match with the ledger. The amount should match with the ledger, and then we should ensure that loans given till 31st March are covered, not after that. On the same lines, only recovery till 31st March are recovered, not after that. So outstanding amount should be proper as per the ledger, and there should be proper cutoff. Only transaction till 31st of March should be considered. U stand for unrecorded advances. This can happen in foreign branches, new branches, that advances go unrecorded. So go and check whether any of the advances unrecorded, advance which was given till 31st of March but not recorded. Then D stand for documents. Always ensure that loan amount is properly supported by the documents. Complete list of documents, like from loan application, creditworthiness, security documents, approvals, guarantees, everything, a proper agreement, promissory note, everything should be there. Proper bunch is there which is confirming the loan, which is proving that loan is real, amount is real and proper. Only amount due to bank should be considered. Lot of time there is a consortium loan or restructuring. It may happen restructuring. That loan is converted into equity, short-term loan to long-term loan. So restructuring, takeover, consortium, only amount which is due to bank should be considered. It should be properly disclosed. There are specific instruction about disclosure with respect to advances. So guys, if there's a question how to do audit of advances, be proud and do the audit. You should talk about basis of valuation, especially in foreign currency loans. P for provisions. You should talk about understanding the RBI norms, rules, regulation, accordingly it should be done. Recoverability, you should talk about insolvency. Then outstanding amount should be as per the ledger, proper cutoff should be there, unrecorded advances should be recorded. Every loan should be backed by documents. Only amount which is due to bank should be considered, and disclosures. Then selection of advances. So when we have to perform these substantive procedures, all large advances, okay, all large advances should be covered. Yes, all the high value advances. Then all problem accounts. What do you mean by problem accounts? So if RBI inspection team, they came to bank, and they declared that these accounts have problem. Now they are problem accounts. Then concurrent auditor. Are you aware about concurrent auditor? A person who is appointed to do audit simultaneously, side by side, as the banking transaction happens, side by side audit should happen. That's concurrent auditor. So all the advances which are reported by RBI inspection team, then below that concurrent auditor, below that bank's inter inspection team, they should be selected. All large advances should be selected, and all the advances which are adversely commented by RBI inspection team, then below that concurrent auditor, below that bank, they should be selected. And from rest of the balances, sampling should be done. Rest of the balances go for sampling. Okay. So guys, we are through with advances also. Any doubt, guys? Any doubt? Okay. So guys, we are through with NPA norms. We are through with NPA norms. We are through with exceptions and clarifications. We are through with drawing power related calculations. We are through with internal controls, evaluating internal control systems. And then we are through with audit of advances. Okay. It's all clear, no doubt. Great. I think we'll be able to cover a lot of things. We'll be covering income and expenses, maybe. Let's see. Okay. Okay. Now before, just to study at a stretch for 2.5 hours, sometime it can become little challenging. So side by side, you should always talk something else, just to relax little bit, isn't it? Okay. So what are we going to talk? So you don't have anything from your side? Sing a song. So what about exam question writing pattern? No, I have not visited Kerala yet. I'm yet to visit Kerala. Why have you not visited Kerala? I don't know. uh yeah. I've not come to Kerala. I've been to for teaching. I've been to Bangalore. I've been to Hyderabad, but I've never come to Kerala. No, not. It's not like I'm not interested. You know, uh, it. It's not about interest. I will say that. If there was no interest, I'm taking this session, and this is for Kozhikode, Kerala. Okay, that shows my interest. Maybe I was busy in north a lot, north and central India, that I never got time to go down visit south. And because of time limitations, now we have our English lectures for CA final, but then we don't have our full English lectures for CA Inter. In fact, guys, this is the first session I'm taking in English for CA Inter as such. I take it for final students. Final students, we have our proper batches also, but then at inter level, because of time limitation, we never ventured into that. Okay. So, How many of you were not aware about me before this session? Just curious about it. That, okay, this is Ravi Taori sir who teaches audit. Not aware. How many of you came to know first time about me from this session? You can raise your hand maybe. Okay. So Faith came to know about the first time. Srijit, Chako, Vishnu, Mohammed, Sharif, okay, Tofi, Vishnupriya, Rayan, Vishnupriya, Abhinav. Okay, okay. So rest of you, maybe you were aware. So let me see whose mic is on. Just a minute. Okay, fine. Great. Okay, guys. Now it's enough of break. Let's complete income and maybe expenses also. Okay, okay. Fantastic. See, when it comes to writing, guys, uh, if you can remember these charts and you can express these charts in your own language, their own language, that will be sufficient. See, there is a myth that if you are going to write as it is, then only you are going to get marks. I think that is a myth. If you remember these concepts, these charts, and express them in your own words, that is sufficient. That is how majority of the students, they get good marks. That is okay. I will do one thing. I will take away the unmute side because okay. So and yes, see, out of lakhs of papers, there can be few papers which, because of human error, they are not evaluated properly. It may happen. Okay, it wherever human beings are involved, human errors are bound to happen. There are lakhs of foundation students, then lakhs of inter and final students, and people appear for 4, 8 papers. So they're literally speaking lakhs of papers. Okay, but definitely I support that human error. There should be some remedy for human errors. Something should be done so that those who suffer, okay, rectification is done for them. But then in general, I will say that if you explain concepts with some technical words and your own language, you will get the marks. So that is most important thing in writing. Don't be hesitant. Don't be afraid of writing. Many people, they are so fearful. They are not able to express. They are not able to express because they fear that they won't get marks. They're frightened. They won't get marks. So I will suggest uh, express concepts in your own language without any hesitation. It is absolutely fine. And take my words, you are going to get good marks. If you're writing proper concepts, you're explaining concepts, you are going to get good marks. Okay. And generally, if it's a case study, first give reference of sections, standards which are applicable, explain, then part 2, explain whatever section standard says. Then part 3, discuss the case. And part 4, you give conclusions. If you can give answers in this four parts, it will be good. But then there are certain questions, they are simply theory questions, straightforward. You don't need to make these 4 parts in that case. You simply explain the concept. Okay. Now guys, let's see. Audit of revenue items, the shortcut is rating revenue of PM and CM. Rating revenue of PM and CM. R stands for reversal. So here we are talking about 4 types of reversal. Reversal of interest income. Whenever a account is classified as NPA, all the accrued income on that account will be reversed, and income will be recorded on that account only on realization basis, only on cash basis. Okay, even if, now this is very important, very interesting, even if there is a central government guarantee, central government guarantee can protect you from classification of account as NPA and provision for NPA. Central government guarantee can protect you. Bank will not have to make provision on such advances. But that guarantee is not going to protect you in case of income recognition. In case of central government, if you are not getting money on regular basis, you will have to shift on the cash basis. Same rule is applicable. So just keep clear in mind, central government guarantee is going to give protection from provisioning, not from income recognition. Okay? Not from income recognition. Reversal of other income. Once a borrower is declared as NPA, all the loans and advances, everything will be declared as NPA, okay, classified as NPA. Now, other incomes like fees and commission, which are recoverable from borrower, in that case also we are going to reverse. In that case also we are going to reverse accrued incomes and shift to cash basis. So if borrower is classified as NPA, interest reversals will happen, even accrued fees and commission reversals will happen. If bank by mistake doesn't apply this reversal in past, and there's a mistake, if there's a mistake by bank and they don't apply this reversal thing properly, they need to rectify it in the later years. If there's a wrong, if anywhere there is a wrong accrual or okay, just a minute. Okay. So someone by mistake shared whiteboard. So I took away that right also. By mistake it would have happened. Now, if any time there was a mistake in accrual or not reversing the income, that will be reversed now. SK has raised your hand. Is it lowering it? Now guys, apart from that, if there is a communication from borrower, anytime that there is a mistake, that, okay, again there is some disturbance, guys. Okay, fine. If there is a communication from borrower that there is a mistake in calculation, you have applied the wrong rate. Or the frequency of calculation of interest is incorrect, then again reversal will be done. Because of this, there will be large debits in the income account. Auditor should check them carefully. So R stands for reversal. We are talking about 4 types of reversal. Reversal of interest income on the NP accounts, reversal of other income on the NP accounts, reversal of wrongly recognized incomes, or there were some wrong reversals because of that, or reversals because of communication from the borrower. So reversals can happen. These 4 types of reversals can happen. Okay. Now, okay, fine. Now, next is allocation. Allocation of discount in bill purchase. Now, this is interesting. Okay. Come on, tell me, guys. When bill is purchased, it is going to give income to the bank or expense to the bank? And what will be the accounting entry? If bank purchased a bill, it is going to give an income or expense, and what will be accounting entry? Suppose purchased a bill of 100 and there is a discount of 10. What will be the accounting entry? Bill purchased account debit 100 to customer account 90 to discount income account 10. Whenever bank purchases bill, they are giving short term loan. Discount is a income for them. Bill purchase account debit to discount to the client to customers. Correct. It's an income. So bank is going to keep purchasing. Whenever they purchase big bill, they keep booking discount income over a period of time. Now, if some bills are outstanding as on balance sheet date, if they're outstanding on the balance sheet date, that means their tenure goes to the next year. If bills are outstanding as on balance sheet date, their tenure goes to next year, then part of the income goes to next year. Part of the income goes to next year, correct? That income should be transferred to next year. That is called as rebate on bill discounted. Correct. That is called as rebate on bill discounted. So, rebate on bill discounted entry will be discount income account debit, rebate on bill discounted credit. So tell me, guys, this rebate on bill discounted, it's a credit balance or a debit balance? Rebate on bill discounted, it's a credit balance or a debit balance? Suppose 4 rupees is the rebate. What will the accounting entry? Debit? Is it? When you purchase bill purchased account, when you purchase bill amount debit 100 to discount income 10 to customer 90. This is the entry. Okay. And now, if 4 rupees belong to next year, you will transfer, you will discount income account debit 4. You will transfer 4 rupees discount income account debit 4 to rebate on bill discounted 4. You will transfer 4 rupees to rebate account. Okay. So it's a credit balance, guys. It's a credit balance. Where will you show this? Asset side or liability side? And in which heading will you show this? Liability side. Which heading? Which heading? Of course, liability. Which heading? Current liability. In bank, it will be shown under heading other liabilities. it will be shown under the heading other liabilities. Other liabilities that can be asked in the MCQ, or it can be targeted in correct, incorrect also. Now, if bank is in need of money, they are going to sell, they are going to sell this bill, that's called rediscounting. They purchased it, that's called discounting. They are going to sell it to others, that's called rediscounting. Okay, when you purchase a bill, you are financing, it will be an income. When you are selling the bill, you are raising finance, it will be a discount expense. Now the question is everyone clear about this? When you purchase a bill, it is, you are doing the finance, it's the income. When you are selling the bill, you are raising finance, it's an expense. Should we show it separately or net it off? Discount income and discount expense, should we show it separately or we should net it off? Whatever we are studying, it is as per the module, nothing outside module, not a single thing is outside module. Okay, it should be shown separately, it should not be netted off, it should not be netted off, it should be shown separately, guys. Okay, so that users are aware what is the financing activity, how much finance was taken, how much finance was given, and corresponding income expenses. Okay, now so quickly, R stand for reversals, so R is for reversals, and we have seen 4 types of reversals. Okay, then A is for allocation of, yes, Mr. CMA qualified, what's the doubt, please let me know. And then A is for allocation of bill discounted. Now T, okay, rating revenue of CM and PM, RA, and T, test check. RBI says that, listen auditor, no need to check all the entries of incomes, of course, and expenses. Of course, that's not possible. They are saying that you should check revenue items on sample basis. On sample basis, that means on test check basis. Similarly, sample basis, test based check basis. Similarly, fees and commission income should be checked on, fees and commission on letter of credit, bills for collection, guarantees, again on test check basis, not to check all the entries. No need to check all the entries. So we are through with R, that is reversals. We are through with A, that is allocation of bill discounted. We are through with T, that is test check basis. Now investment income. What will come in investment income? What will come in investment income? It's very simple. Interest on debentures and bonds. Interest on debentures and bonds will come in investment income. Apart from that, dividend on shares will come in investment income. But then we'll have to make some adjustments. We'll have to make some adjustments. We have to make some adjustments, deductions. We will have to make some adjustments. We will have to make some deductions. Okay, some adjustments, some deductions. Now they're talking about 3 types of adjustments. They're talking about 3 types of adjustment, 3 types of exceptions. Number 1, if you are earning dividend, it goes to investment income. But if you are earning dividend from subsidiaries and joint ventures, it will not go to investment income, it will go to other income. So just ensure that dividend from subsidiaries and joint ventures is going to other income, not investment income. Can anyone tell me why? Anyone why? Why so? Why it is not going in investment income? So dividend from, ensure that dividend from subsidiaries and joint venture is not going to investment income, it is going to other income. Answer is very simple, straightforward. Investment income means passive income. Investment income means passive income. That means you have invested money once and you are getting money sitting at your home, you are getting money automatically every quarter, every 6 months, or every year you are getting money. That's a passive income. But when you invest money in your subsidiaries and joint venture, that is not a passive income. You are involved. That's an operational income. That's why the nature of the income is different. The nature of income is different, so it should be shown as other income. Okay. Have you studied, next is, have you studied the investment accounts in accounts, investment accounting? Yes, no? Okay. So whenever you purchase a debenture or bond, whenever you purchase debenture, when you purchase debenture or bond, you pay accrued interest. Okay. And whenever you sell, you get accrued interest. Okay. That is also called broken period interest. What RBI is saying, RBI says that whenever you buy, sell debentures and bonds, you pay for accrued interest, you get accrued interest. That is called broken period interest. Now this, when you pay this interest, broken period interest, you should debit it to interest column. Of course, yes. You are going, suppose you purchase debenture 2 months after the due date, 2 months after interest payment. So you are going to pay interest for 2 months and you are going to get it for 6 months. Okay. You are paying interest of 2 months to the seller. You are going to get it for 6 months. Debit interest of 2 months, credit interest of 6 months. Automatically you will get income for 4 months. I am saying suppose debentures, in debentures interest is paid on 6 monthly basis. 6 monthly basis. So it's very simple, guys. If you pay for broken period interest, accrued interest, you are paying this interest to get interest income. You are paying this interest to get interest income on the same security. It should be netted off. It should be debited to the interest income column. It should be adjusted. Again, sometimes you pay premium. That means extra money. Redemption value is 100. Redemption value is 100. You are paying 105. Why will someone pay 105 when at the redemption you are going to get only 100? After 5 years on redemption, you are going to get 100 rupees. But in the market you are paying 105. Why will someone pay more? Can anyone answer this? Why will someone pay more? More return on investment. Why will someone pay premium when he is going to get 100 rupees on redemption? We are paying 105. Okay, answer is simple. Maybe because the interest rate at which we are earning on that debenture is higher than the market interest rate. So again, understand, if we are paying premium, that means we are earning high interest. Again, that premium 5 rupees should be written off over a period of time. You should write off 1 rupee, and that premium you are paying to get more interest income, that should be adjusted against the interest column. So there are three types of adjustment. Dividend of subsidiary joint venture should be adjusted and taken to other income. Broken period interest is paid to earn interest income, it should be adjusted. Premium on securities is given to get more interest income, even that should be netted off, adjusted. Generally, you may pay this on SLR, statutory liquidity ratio. To maintain SLR, you have to maintain SLR, you have to maintain investments. Okay. Profit on sale of investment, it will not go to investment income, it will go to other income. Be careful. Be careful. Profit on revaluation of investment, even that will go to other income. Be careful again. In MCQ and correct incorrect also. Rating, I stand for NPA effect. I stand for NPA effect. Okay. Let's quickly just finish this interest thing. Let's finish this interest thing for today. NPA effect. Now, rating N for NPA. Finance lease. Finance lease is only lease for, it is lease for namesake. It is actually loan given. Finance lease is lease only for namesake. It is loan given. And you book interest income on accrual basis as per AS 19. But if finance lease become NPA, we will have to apply the same concept, reverse all the accrued income and book everything on cash basis. So even in case of finance lease, moment it becomes NPA, we shift to cash basis. We shift to cash basis, guys. Then loan given on the basis of Super 5 securities. Loan given on the basis given of Super 5 securities. That's very important, guys. This is extremely important. Super 5 securities. Suppose loan given is 100 and we have security of 125. That means extra security. Security over and above the loan amount. Over and above the loan amount. That is called as margin. Yes, that's margin, 25. Now, very interesting. We can book 25 as accrued income. We can book 25 as accrued income. Even if they are not paying amount on regular basis, to the extent of margin, we can book it on accrual basis. Beyond 25, we have to shift to cash basis. That's again very interesting and very important. Now next is take out finance. That's very interesting, guys. So let's see. Many times bank finance infrastructure project. Suppose SBI financed a bridge of 10,000 crores. Now SBI took the risk, gave loan of 10,000 crores, bridge was built, it was completed successfully, it was operational, and to travel on that bridge you have to pay toll amount, you have to pay money. So money is collected and given as repayment to SBI. They have started recovery also. Okay. Now, if SBI wants to free its money, SBI gave loan of 10,000 crores, project is successful, they have started recovering money. What they will do? They will sell this loan. They will sell this loan to other banks and financial institutions with a good premium, and they will free their money for other projects. This is called takeover. When loan of one bank is taken over by another bank, or another financial institution, that is called as takeover. That is called as takeout finance. Okay, very common thing. Now, sometimes even NPA loans. Yes, guys, Even NPA loans are taken over. Sir, why will anyone buy NPA loan? Because you get NPA loan at cheap prices. You get NPA loans at cheap prices, extremely cheap prices, at dirt cheap prices you get it. So people will buy NPA loan. What RBI is saying, that listen bank, you had NPA loans and these NPA loans are taken over by some bank or financial institution. Okay, account deal is done. It's a positive thing for you, but that doesn't mean you book income on accrual basis. No, even if takeover is happening, takeover has happened, it is a good thing for you. You will never book income on accrued basis. You should book interest income only when money is received, either from the taking over institution, either from the taking over institution or from the borrower, either of them, either of them. Okay, so that's important. So same message is there, same exactly same message is there in takeout finance also, that don't, even if the takeover is happening, don't be bullish, follow cash basis only. General points: always ensure there is no unrecorded income. Ensure that none of the loans and advances are left out. Income is booked on all of them. Even the accrued income is booked. Further, nothing should go unrecorded, and whatever is recorded, it should belong to bank, not to participating banks or others. It should belong to bank. It should be at proper amount and at proper period. Okay. Let's finish off this, guys. Restructuring. It's very simple. So rating revenue of CM and PM, PM and CM. So R is for restructuring. Many times we give loan. Many a times we give loan. After giving loan, borrower comes, oh, I am not able to repay, I am not able to repay, something went wrong, our estimates went wrong, this, that, and so on. So bank is going to study the whole case, and if they feel it's a genuine case, everything is fine, he needs little bit of more time and more financial support, and he will repay the loan and interest also. Okay, so they will do restructuring. They will give time to the borrower. They will do restructuring. Okay. Fees or commission charged on renegotiated rescheduled loan should not. Hello. Any doubt? Okay, guys, let's finish off this thing. So, but bank will be spending time and taking risk. If restructuring happens, okay, they are going to charge fees or commission. They are going to charge fees or commission on renegotiated loans, rescheduled loans. What RBI says, this fees or commission should not be booked on immediate basis. It should be booked over a remaining period of time, remaining period of rescheduled loans, remaining period of renegotiated loans. Okay. Now, P stand for partial recovery. So, what do you mean partial recovery? Suppose installment is overdue, bank is supposed to recover 10 lakhs. Principal amount is 8 lakhs, interest is 2 lakhs. That is the breakup. They got only 1 lakh. Now there is a question. Now there is a big question. What is this big question? What is this big question? Okay. What should be done? It should be treated as principal recovery or interest income. If it is a principal recovery, accounting entry will change. Cash account debit to loan account. If it's a interest income, cash account debit to interest income. What should be done? We have to go and see the agreement. Whatever agreement says, if it's principal recovery, principal, interest, or 50-50 or whatever it is. If agreement is silent, then in that case, we have to see policy of the bank. So there should be a well-defined policy approved by maybe board of directors, and it should be applied uniformly across all the loans. Okay, across all the loans. And accordingly, accounting policy will be set. So whether recovery or interest income. Further, always ensure that interest income should not be booked if the payment of interest is happening from the fresh loan of the same bank. If you are getting money out of your own resources, if there is don't book income. If you are not having if the person is not having genuine source of money, don't book interest income. Come on guys, last three things quickly. Maturity level. RBI has given two maturity levels for incomes which are booked on gross basis. That means interest income, dividend income, commission income, okay, on gross basis, and net basis, that is profit loss on sale of investment, profit loss on revaluation. Income which are booked on gross basis, it is 1% of total income. And for net basis, it is 1% of net profit before tax. Net profit before tax. Okay. Now, what should be the treatment? What should be treatment? Now, if there are incomes below maturity level, you can book it in any manner you want. No need to follow accrual. You can follow in any manner. No need to follow accrual. If there are incomes below maturity level, below 1% of total income, below 1% of net profit before tax, follow cash basis, it is absolutely fine. It's okay to leave the accrual basis. Okay. But just ensure, again, in income recognition, if you want to book income for material incomes, so what they are saying, immaterial income, okay, it's okay even if you follow cash basis. For material income, you should always follow accrual basis. Okay, then we know that if NPA is there, we shift again to cash basis. So immaterial income, cash basis is okay. Material income, accrual basis, fundamental accounting assumption. NPA, again shift back to cash basis. Okay. Again, at the time of booking income on accrual basis, always book income when you are confident of getting money. Bills for collection. You all must be aware about bills for collection. It is a service income. Bills for collection, commission is a service income. Only when the bill is collected, money is deposited in the customer's account, service is given, then only income should book. There is no concept of accrued income in bills for collection. It happens in bill purchased. In bill purchase, there is accrued income. In bills for collection, only when the service is complete, income should be booked. Last thing, memorandum account. Guys, in NPA, we reverse the accrued income and we reverse the accrued income and we shift to cash basis. We reverse accrued income, we shift to cash basis. Okay. So our books of accounts are not having any interest details. But we want to have all the details so that we go for recovery. We want to know what was the loan amount, what is the total interest income accrued, what is overdue, everything. So that when we go for recovery, when our team goes for recovery or we go to banks or whatever, we should be aware. So for that memorandum account, that means outside books of account, outside financial books, outside financial book, a separate register can be maintained as memorandum account on, and you can, on that, for each loan, you can keep a record. How much is the loan outstanding and how much is the interest due and so on. So that for recovery purpose, information is ready. That is called as memorandum account. Even if you are maintaining memorandum account, in balance sheet, you will only have the loan amount and not the interest accrued. Okay. Guys, we are through with NPA norms, exceptions and clarifications. We are through with drawing power. We are through with internal controls or advances. Then substantive procedure or advances, and this huge audit of revenue items. Okay. Okay. Tell me which particular chapter you're interested in. Tomorrow, if we finish off bank audit early, we will see key points of bank audit. Which chapter you want me to cover apart from bank audit? Which chapter? Chapter 4, risk and controls, risk assessment and controls. Chapter 4, chapter 13. Okay. You can simply give your preferences. I will decide accordingly. Okay. Chapter 13. Okay, guys. We'll see chapter 13 then. We'll see government audit and maybe some cooperative society, and we'll see some points from chapter 13. Okay. Bye bye everyone. We'll meet tomorrow.